Hey there, Chad Rankin with Find My Way Home. If you're not familiar with our channel or website, our goal is to provide video resources, specific mortgage underwriting, hot topic, guidelines, to hopefully save folks like yourself from the many troubles that so many have unnecessarily experienced when trying to buy a home. Owning a home is a dream for so many, but it can quickly become a nightmare if you end up with a bad pre-approval. I mean, have you ever heard of someone talking about just the horrible experience that they had when they're trying to buy a home? Or you'll hear it from both folks that tried and were declined, or folks that actually ended up buying a home. It's just way too common, and folks get their hopes up only to have them dashed because the loan officer that you worked with, they didn't do their due diligence. So today, what I want to do is show you how to avoid and make sure that your pre-approval is rock solid. Just avoid that heartache. First, in my opinion, I believe it's crucial for you to interview the loan officer thoroughly. This might take a few conversations and discussions just to make sure that they really truly know their stuff. The same goes for your real estate agent ultimately that you choose to work with, but we'll just focus on loan officers for now. It's important to point out also that you can't start looking at homes until you have that pre-approval. So a good real estate agent, if you come to them first, they're just going to send you over to either a loan officer that they recommend or a list of 3 of them, or they're going to just tell you to look online and find somebody. But you're going to need to get pre-approved in order to look at homes. So whether or not you get that loan officer recommendation from friends, family, neighbors, or the realtor that you've chosen to work with, it's essential that you do your own research. I've actually heard statistics of 80% of hopeful first-time home buyers will actually verify the credibility of that loan officer by researching them online, their reviews and presence, just to make sure that they believe they're a credible source. So when choosing that loan officer, ensure that they're both knowledgeable and someone that you mesh well with, someone you feel comfortable with, someone that puts you at peace, a clear expert in their field. You don't want any surprises down the line. You want thoroughness up front. You don't want the surprise that is losing money because you got a decline later. You paid for a home inspection or an appraisal. You don't get that back once that money is spent. So a good loan officer and their team, they're going to do their due diligence up front to make sure your pre-approval is gold. This will involve taking a complete application, reviewing your credit, your work history, your income, depending upon your stream and type of income. Maybe your hours are variable. A good loan officer may need to go, through a more in-depth process of requesting upfront written verifications of employment, maybe not just your current employer, but maybe even your past employers, as we need a 2-year history, to make sure that you meet the underwriting guidelines and taking into consideration all of the elements of your pay. It could be shift differential, overtime, commission, bonus, etc. Which if you're self-employed as well, there's going to be other factors, requesting tax returns, not just W-2s and pay stubs and bank statements, like most traditional non-self-employed guidelines would require. And so my advice is, before you apply, make sure you feel comfortable with the loan officer or loan officers that you have spoken with, that you've essentially interviewed. Submit your application only if they're doing a soft credit inquiry and that you trust their expertise. And I'll talk a little bit more about that later, but a few questions. And the first one I may suggest starting with would ask them if they're licensed or registered. So licensing means that they've gone through rigorous testing and continuous education in every state through the National Mortgage Licensing System, NMLS, whereas registered loan officers, like the ones at the local credit unions or the big banks in cubicles and sprawling call centers in some faraway state, may not have the same level of experience. They may not offer state-specific down payment assistance programs, for example. So you need to ask them about the programs that they offer based upon what you desire. If you find yourself speaking to one of the registered loan officers, just ask them a lot of questions. Like I said, if you want down payment assistance, ask them about the state housing programs that they offer. And if they don't offer them, well, maybe you want to speak with a licensed loan officer and their team. Those who are licensed in each state that they do business in, they're not just automatically registered in all 50 states like the big banks or the credit unions are, simply because they work for a nationally insured big bank or credit union. They don't have to go through licensing in each state that they operate in. They're automatically given the registration. Ask them if they do a hard credit inquiry. Like I said before, hard inquiries can impact your credit negatively, especially if you have to do it a bunch of times. If you don't buy a home in 6 months or a year, it happens a lot. So I just suggest that you work with a lender that will first start the process with a soft credit inquiry, just to initially assess and offer guidance as to where you stand. With good enough credit, a soft credit inquiry may be all that's needed in order to get you a pre-approval, because Fannie Mae and Freddie Mac, they allow us to run their automated underwriting system, AUS for short, with just a soft credit inquiry. So in this scenario with the AUS approval, a good lender wouldn't even need to complete a hard credit inquiry until you actually got under contract to buy a home with an accepted offer, at which time they would have to do the hard credit inquiry. As I do this video here at the end of 2024, FHA, VA, and USDA still do not offer the ability to get an approval with a soft credit inquiry. So if you don't pop approved with a soft credit inquiry, your loan officer is going to have to ask you specifically, for permission to do the hard credit inquiry to see about potentially getting a pre-approval for FHA, VA, or USDA. Just an FYI on that. And sometimes there isn't an approval. So you just, at that point, you're going to get a credit plan from your loan officer. Or let's say you don't want to have your credit pulled right now hard. That loan officer can just give you a credit plan based upon the soft credit if you would prefer. But that's really totally up to you. They can look at the soft credit and tell you what they think, if they think it'll pop approved with FHA financing or not, and leave it up to you what you make that decision. So either give you the credit plan or get permission to pull hard and then get you a pre-approval or a decline with a credit plan to help get you there. Move on to if a pre-approval is being issued. They should be able to, the loan officer, fully explain to you what programs are available, what you qualify for, the conclusion that they personally arrived upon, what they think in their expertise is the best program for you. And feel free to ask them, what decision engine did you use to come to this conclusion? Whether or not it's a pre-approval or not, And the reason is because there's a few different decision engines. It can be crucial sometimes to ask, loan product advisor, LPA, which is Freddie Mac's, AUS, DU, desktop underwriter, it's Fannie Mae's AUS, and GUS, guaranteed underwriting system for USDA loans. FHA and VA utilize both LPA and DU for their decision engine, and so do most state housing. But understanding which engine was used can give you insight on the thoroughness of the evaluation from the loan officer, because many lenders use only one of them. And since the different AUSs can present different results, including a possible approval for one versus a decline from another, it's important for you to know that the lender is not, if they're looking at all options, if they're only running one decision engine, you may not be getting a full set of options. And so many times we are the second, third, fourth lender reviewing a file, and many times we can actually get an approval because of that scenario. And so that's why the Consumer Finance Protection Bureau, the CFPB for short, suggests that you get 3 opinions. I would also suggest, did you get accept eligible findings? And it's important because if your borderline FICO credit scores, with borderline FICO credit scores, FHA goes down to a 580 FICO with as little as 3.5% down payment, or even into the low 500s with a 10% down payment. But it's never a given that you're going to pop approved and that findings will come back accept eligible. So it's essential to ask these questions, because we've seen a lot of cases where a client was previously pre-approved with a loan officer, and clearly there was not a thorough evaluation. But folks went shopping because they had a pre-approval, they got under contract to buy a home, then they were declined because the loan officer didn't run the findings. They just assumed that there was going to be an approval based upon the FICO. We've seen people with a 650 FICO that would normally pop approved with FHA financing, not for one reason or another. And I won't go into all that right now, but there's a lot of potential reasons for that. So in general, loan officers like those who issue pre-approvals without that due diligence, which takes time and effort, they give folks in our industry a really bad name. And it's one of the reasons for this video here. So whether or not you simply spoke with or interviewed a number of lenders before applying with your favorite, have applied with multiple lenders, compare their answers to these questions. I suggest always comparing their answers. You know, how they responded. Remember, a thorough loan officer will save you a lot of headaches down the road. Make sure they are crossing all their T's and dotting all their I's from the very beginning. This diligence will make your journey to homeownership much smoother and more enjoyable. And hey, you know, if you haven't been happy with the lender or loan officer that you work with, if you want a second opinion, please feel free to reach out to myself and my team. You know, I'm licensed in 34 states. We've got access to all the programs offered in those respective states. And my team and I, we're ready to help. And if we're not licensed in one of the states that you're interested in, got a large network here at Find My Way Home of friends that are licensed in all 50 states. And we are super happy to help you on your way, on your journey, even if I'm just passing your name along to somebody that I trust. So please like, subscribe, and share. And if you have any questions, always please reach out to us.